Good morning and welcome to PacRobo Pulse for Thursday, December 4th, 2025. Markets started the day on steady footing as investors leaned heavily into expectations of a December rate cut, especially after a surprising drop in private sector hiring rattled Wall Street in the early hours. Let's dive in. The S&P 500 rose 0.30%, the Nasdaq 100 inched up 0.20%, while the Dow Jones added a solid 0.86%. The tone across the market shifted quickly after the latest ADP employment report, which showed a 32,000 job decline, the largest drop in 2.5 years. That unexpectedly weak reading pushed rate cut expectations to their highest levels yet, with traders now pricing in a 95% chance of a quarter-point cut at the December meeting. Tech stocks delivered a mixed performance. Microchip technology jumped 12% after issuing an upbeat earnings forecast. Marvel climbed 7%, but Microsoft dipped nearly 2% after restructuring its AI software sales quotas. Netflix also slid roughly 5% amid reports of a potential cash offer deal for Warner Bros. Discovery. In currencies, the US dollar index slipped to a 5-week low, down 0.5%, while the euro touched a 6-week high, and the yen strengthened on rising confidence that the Bank of Japan is preparing to hike rates later this month. Gold added a modest 0.28%, while silver edged slightly lower. On the economic front, the ISM Services Index surprised to the upside, climbing to 52.6, the highest level in 9 months, signaling renewed strength in the U.S. services sector. Mortgage data, however, leaned softer, with applications falling 1.4% and the average 30-year mortgage rate rising to 6.32%. Commodities traded in a choppy band. Soybeans slipped 4 to 6 cents, cotton weakened, while cattle futures jumped more than $1.50 on tight supply expectations. Coffee and sugar were mixed after several volatile sessions, and crude oil pulled back to roughly $58 and change as traders digested shifting demand signals. Overseas European markets moved higher, with the Euro Stoxx 50 reaching a 2.5-week high. Asian markets were more uneven. The Shanghai Composite dipped slightly, weighed down by persistent consumer confidence concerns. Altogether, it was a day defined by data surprises, shifting rate expectations, and sector-specific winners and losers, all setting the stage for tomorrow's key economic releases. That's your Thursday briefing from PacRobo Pulse, a blend of cooling labor signals, stronger services data, and markets firmly positioning ahead of the Fed's next move. Stay sharp, stay strategic, and I'll catch you in the next update.